Tesla is an American technology company that focuses on electric vehicles and sustainable energy solutions. It was founded in 2003 by Martin Eberhard and Mark Tarpenning, with Elon Musk joining the company in 2004 and later becoming its CEO. The company is named after the inventor Nikola Tesla, reflecting its innovation-driven vision. Tesla launched its first vehicle, the Roadster, in 2008, followed by popular models such as Model S, Model X, Model 3, and Model Y. Over time, Tesla has played a major role in increasing global acceptance of electric vehicles.
Assalamualaikum to our lecturer. My name is Farah Waida and I will present rate of change Tesla. So first thing first, in terms of trend structure analysis, so we look at the price movement. Tesla first experienced a sharp drop in the early months. After that, the price recovered strongly and moved into upward trend in the later months. However, towards the end of the period, the price movement remained relatively flat. So let me simplify in terms of momentum indicator. So based on the chart, at the start of the year, the ROC was negative, which showed a bearish momentum. Around mid-year, it crossed above the zero line, which signaling the start of positive momentum. And during the rally, ROC stays strongly positive, which confirming the uptrend. And recently, ROC has started to fall, which means momentum is slowing even though the price is still high. As for risk return and drawdown assessment, Tesla is the stock with the most optimal risk return profile when the ROC is close to zero and trending up. So a high or declining ROC indicates the possibility of high drawdown risk as well as low return potential. So in terms of summary signal, when to buy, hold, and sell. So according to the chart, a buy signal occur when the RSI move from negative to positive and crosses above the zero line. So this can be seen around May to June, where the RSI turns upward and the price starts to recover, which show a shift from bearish to bullish momentum. Next, a hold signal occur when the ROC stays above the zero line and moves sideways. And this can be seen around September to October, where the prices continue to rise and momentum remains strong. Lastly, a sell or caution signal occurs when the ROC starts to decline from high positive level. So this can be seen around November to December, where ROC weakens even though the price remains high, which show that the momentum is slowing and upside potential is decreasing. Lastly, let me simplify it for hypothetical trading. So first, the trigger happens when the price pulls back but the ROC stays near the zero line and starts to turn upward. Next, we enter long position to trade when the ROC crosses above the zero, which confirming positive momentum. And before that, to manage the risk, we need to set a stop loss at support level to limit losses. And overall, this trade aims to capture a price rebound supported by renewed buying momentum. That's all from me. Thank you.
Next, I am going to present about stock performance using the moving average convergence divergence indicator. On the year-to-date trend, if we look at the bottom left, Tesla had a strong bullish expansion from August to October. However, in November, it hit a bearish transition, and right now in January 2026, the stock is struggling to stay above the $437 level. For the MACD momentum indicator, the big winning, which is bearish divergence, we can look at the orange circles on the chart. In October, the stock price was making a higher high, but the MACD was making a lower high. This told us that buying pressure was actually decreasing while the price climbed. This was a clear warning that predicted the crash we saw in November. We saw a bullish crossover in late November, which gave a nice recovery rally. But as of January, we have a new bearish crossover, which is in the red circle. This is a sell signal showing the trend is getting weak again. Moving on to our risk return and drawdown assessment. Tesla is volatile. It currently has 12% drawdown from its December high. If it breaks below $400, we could see a major structural failure. So the main risks right now are high valuation and profit margin concerns. In the trading signals, the strategy identifies three clear zones. The first one is buy in the late November at $390 when the MACD crossed up, and then we hold through December as the price stayed above support, and then we will sell in early January at $485 after the rejection at the $500 resistance level. So last, hypothetical result. By following these MACD signals, a trader could have made a 21.5% profit, which is about $2,125 on a $10K account in just over a month, while safely exiting before the current January drop. In conclusion, using the MACD helped us see when the strength of a move is dying out before the price actually falls. Thank you.
My name is Lia Jo, and today I will present about the stochastic Tesla. Based on the chart, the momentum condition is bullish, as the price formed higher high and higher low, indicating strong buying pressure in the market. Next, looking at the stochastic relative to zone, the indicator is currently above 18, which indicates an overbought condition. However, as long as the stochastic remains above the 50 level, the uptrend is still strong and the bullish momentum is maintained. In terms of cross behavior, a bullish crossover occurs when the K line crosses above the D line from the lower zone. After this crossover, the stochastic continued to move upward consistently and confirming sustained buying momentum rather than the false signal. Next, a buy signal occurs when the stochastic indicator rises from below 20, indicating an oversold condition. This signal is stronger when aligned with the price bouncing of a support area showing renewed buying interest. A sell or take profit signal appears when the stochastic stays above 80 an extended period and then start to curve downward. This suggests weakening momentum, making it a acceptable level to secure profit rather than exit the trade completely.
Into the Relative Strength Index or RSI analysis. This indicator helps us understand the strength and direction of price momentum. Starting with the broader picture, on a year-to-date basis, Tesla is still in a strong bullish trend, as the price continues to form higher highs and higher lows. The recent pullback we see is considered as a healthy correction, rather than a sign of a trend reversal. Current price action suggests rotation and consolidation, not a breakdown of the overall trend. Looking at the daily time frame, the current price is around $445 after pulling back from the $480 to $490 resistance area. The market has been moving sideways after the decline, and importantly, price is still holding above a key demand zone, with no decisive breakdown on the daily chart. Key support lies at $420 to $430, while resistance remains near $470 to $480, and the breakout zone around $495 to $500. From a momentum perspective, the RSI in bracket 14 previously showed a bearish divergence, where price met higher highs but RSI met lower highs, signaling momentum exhaustion. RSI then declined into the 40 to 45 range, aligning with the corrective move. However, RSI did not fall below 30, indicating that selling pressure remains controlled. Currently, RSI is stabilizing around the mid-40s, which may lead to either a period of consolidation or a renewed upward move if resistance is broken.
Assalamualaikum and good day, Supporter. I'm Sharna Koramiti Swahili. Today I will explain the Relative Strength Index or RSI based on Tesla's price chart. First, RSI is a momentum indicator. It is used to measure the strength of price movement and to identify whether a stock is overbought, oversold, or moving in a natural trend. Based on the chart shown, we analyze Tesla's price together with the RSI line to determine possible trading signal. Now let's discuss risk and return. So for the risk, the stop loss is placed below the recent swing low around $413. So this is limits the downside risk if bearish momentum continues. For reward, the first major resistance is between $418 and $500. So this gives an upside potential of approximately 10%. So next, there are three possible signal types in RSI analysis. There are buy, sell, and hold. So for the buy signal appears when RSI shows bullish momentum. A sell signals appears when RSI shows bearish momentum. But the hold signal appears when RSI moves sideways and the market direction is unclear. So now let's look at the trade signals and output. So currently the status is pending. This means the trend is not confirmed yet. A buy entry will only be confirmed if Tesla closes above $418 on a daily basis and the RSI moves above 15. If the RSI stays below 15, the outlook remains bearish to neutral. At the moment, the market is in a consolidation phase, so the price direction is still unclear. Next is the hypothetical trading scenario. The strategy used here is RSI divergence pullback. The anticipated entry date is January 2026. So the entry price is around $415 if the price holds support and the RSI stabilizes above 45. The stop loss is set at $413, which is below the recent support level. This helps to limit potential losses if the price moves against the trend. Finally, the outcome analysis. If the price reaches the first target at $418, the gain is about $13 per share. Traders are advised to lock in 15% profit at this level. To reduce risk, the stop loss can be moved to break even at $415. If the price fails to hold support and the RSI weakens further, the stop loss will be triggered. That's all for my RSI analysis on Tesla. Thank you for listening.